Hey everybody, Economic Ninja here. Hope you're doing well. Trump has got a really interesting plan, I believe, and I'm curious if you would agree with me. I believe he's slow playing this whole are we going into a recession thing, getting other countries to believe that he is somewhat okay with it. And the reason why is because one thing that happens when we fall into recession, interest rates drop, right? Because someone somehow has to spur on the economy or get it going. And I don't think that we're out of the woods yet. Now, as of the recording of this live stream, the Dow Jones is still down almost 200 points, but everything else started to just marginally lift. Crypto, which has been just getting hammered, lifted right since last night. And it's interesting because I believe we're going to see more of this. But what's going on? Canada wants to all of a sudden have trade talks, right? Where they're saying, hey, they're going to suspend, they're going to maybe cut out electricity, the electricity that they sell to us. And then all of a sudden that came out and they said, okay, we're not going to do that. And now we're open for trade talks. But it looks like here, Trump raises Canadian steel and aluminum tariffs to 50% in retaliation for Ontario's energy duties, right? So we are in a full-blown trade war right now. And as a matter of fact, we've seen recently where Canada goes after China and they're trying to tariff them. And China's like, you don't understand. You really have no leg to stand on. And it is really, really heating up. Now, the fact of the matter is the S&P has really been taking a nosedive along with crypto and some other things. And I think you're still going to see some more shaking happening. And just this right here, Trump raising these steel and aluminum tariffs 50% shows you that we are nowhere near the end of this. What's it going to do to mortgage rates? Well, let's go look at the bond market. Right now, the 10-year rose today 0.076. It's at 4.2%. But the thing is, when the inevitable happens, the announcement that we are in a recession, remember, Joe Biden, his campaign was all about lying to you, right? Type one if you guys agree. All he was doing was lying to you. Everything's great, even to the point where we were in a technical recession, and he just said, well, I'm just going to change the definition of a technical recession, right? This is a big deal. This is why also what we're talking about with interest rates is why I want to put that mortgage master course, the 2 courses for one price, links down below for Mortgage Master Pro and Investor Mortgage Master course. Because you're about to see a ton of people as the recession is announced, and you've still got first quarter, I believe, is going to have some pretty bad numbers coming out. We're seeing unemployment tick up slightly. I think those numbers are going to get worse as we see more government employees lose their jobs, things like that. And what will happen is the market will start to panic and sell off even more than it is now. And then the Federal Reserve will come in and go, hey, you know what, let's lower rates. Now, another thing that's really important to note is that historically, when things are bad enough for the Fed to go around and all of a sudden say, hey, we're going to lower rates, there's usually some type of government stimulus that goes along with that. And I believe that is going to happen. Now, here's the problem, though. Home prices nationally have still not cooled enough to where if all of a sudden rates dive down and people rush into mortgages, which they should if they are refinancing things like that and they're saving money. But if people start to speculate again, it's going to take real estate prices to an all-new high. Now, it's not just that's bad enough, right? When it comes to mortgages being higher because the price of the home's higher, what happens to the insurance? We are in a national state of emergency, or it should be declared, on homeowners insurance. And the more expensive homes get, the more difficult it is for insurance companies to keep prices where they are. And the fact is, most people are being priced out, not only because of homeowners' dues and property taxes, but home insurance as well. And obviously, the fact that we're sitting at like 6.5% mortgages when the price of homes are still so darn high. So that, I believe, would have a whipsaw effect on Trump. But as of right now, he's playing it really easy. When Maria Bartiromo the other day was asking him about, what he felt about the strength of the economy, were we going to fall into a recession? And he goes, I don't, and I'm paraphrasing here, I don't really like to speculate on those kind of things, but there's going to be some pain. We're in a transition period, and transitions always have pain. Well, what do you think that looks like to other world leaders around the world? That looks like he's saying, yeah, if we fall into a recession, it wouldn't be the worst thing right now, because then what happens to everyone else? China's trying to sell goods to us. Canada's trying to sell goods to us. We go into recession, and just the word recession right now would send shockwaves through the average consumer, because what they do is when they hear we're in recession, what do? They recess or they regress. They pull back on their spending. They go, well, this is the cycle. We're in it. It's the winter, so we're just going to huddle down and we're not going to buy and spend money. And that is really important to realize, because countries like China and Canada and India, they're watching us go, if the US falls into recession, we're all going into recession because we want to sell them our crap. And if they don't buy our crap, we're screwed. And you see, so this is a really neat strategic thing that's going on. Craig here says, crash the market now before AI crashes it for us. It's a really good point. He said, Trump knows what he's doing. He sees the future. Do it now. Bear the pain. Build up in the next 3 to 4 years. And that's really good advice. That's exactly what I'm doing right now. You see, I'm trying to buy on the dips. I still believe that we're going to see Bitcoin at a lower price. Guys, type 2 if you agree with that. I believe we're going to see the stock market at a lower price in the next month than we do right now. And I think it's important to realize that. And it's not because you want to put all your eggs in one basket and speculate, but it's like, this is why you have cash on the side. I've got cash. I took profits in certain projects, mining stocks, cryptocurrencies, and things like that I had recently when we saw us go under the 200-day moving average for so many different assets. And I said, I'm just going to pull some money off the table. You know what, if I'm wrong, and look, it's bouncing back right now, I'm like, you know what? I don't care. I think we're going to have a little bit more downside. And I think that sitting back with a good stack of cash on the side right now, like Warren Buffett's doing, is better than having all your eggs in even a couple of different baskets, but you're so leveraged and so vulnerable to market swings. I wanted to share all this with you, I think, because it's very important that you look at the big picture. I think mortgage rates are going to go down because the bond market is ultimately going to go down in the next 8 weeks. And if you want to look for a mortgage and you want to save 10 times the cost of this course, I highly suggest you get the course. It's helped thousands of people, and it sounds funny, but it's all these tips and tricks on how to get the best mortgage, find the best broker, how to look at the numbers objectively and save so much money. It's stupid. And saving money is making money. So the link's down below if you want to check that out. And one last thing I want to share with you is, again, for people that are in crypto, guys, type crypto if you're in crypto, or whatever crypto is your main thing. These are the time to buy, but the sad thing is most investors spend all of their money when prices are going up. And it's because they don't want to miss out, that FOMO, right? Well, the problem is these dips now become these incredible buying opportunities. I've been layering in buys, and a bulk of my buying is going to happen when Bitcoin hits 73,000. Now, I could be wrong. I don't think I'm going to be, but I could be. And if I'm wrong and it just takes off and just shoots to the moon from here, well, then I've got still some cash in the bank. What's so wrong with that, right? Because you never want to be fully invested in one asset class. All right. Thank you so much for watching. I hope you got something out of this. I got to get back to remodeling my house. The Economic Ninja is out.